Shares of Netflix are absolutely soaring after they reported Q3 2023 results. We'll come in here, take a look at this most recent quarter, take a look at the forecast made by Netflix for the upcoming Q4, jump into their different regions and see how subscriber numbers came out across there. Take a look at the revenues, balance sheet, and statement of cash flows. And as always, jump into the technical stock chart for Netflix. If the gains in the after hours hold, this one will post a big green candle tomorrow, and we'll see where shares will head after that. As always, if you're new to the channel and find this type of content valuable, be sure to hit that like and subscribe button below. We are on the road to 600 subscribers, and your support would mean a lot. Shares of Netflix in the after hours, I'm seeing up nearly 12.5%, closer to $390 per share. This stock is up close to 20% year to date. That doesn't include the gains in the after hours. Over the past 1 year, up nearly 44%. Now, what I do find surprising is over the last 5 years, Netflix stock has gone roughly nowhere, as it's up just 2%. Now, if the gains in the after hours hold tomorrow, this will be up close to 15% over the last 5 years. Not great performance regardless. Now, Netflix did blow the numbers out of the water in this most recent quarter as they posted revenues of close to $8.54 billion. That was roughly in line with the street expectations. However, they did beat on that bottom line as they posted EPS of close to $3.73, and estimates were closer to $3.48 on that bottom line. Now, that top line of $8.5 billion represented nearly 8% growth year over year. Operating income coming in at $1.9 billion. That was good for operating margins of roughly 22.4%. You see, a year ago, they were sitting at just 19.3%. So operating margins expanding year over year. Net income coming in at $1.6 billion. That leads to a diluted EPS of $3.73. A year ago, they were at just $3.10. So nice year over year increase on that bottom line. Now, a big reason for this stock jump is likely due to global streaming paid memberships coming in at 247 million. That is nearly 11% growth year over year, as Netflix added close to 8.76 new streaming paid additions. You see, over the last 4 quarters, growth was at just roughly 4 to 5%. In Q2, they did post 8% growth. However, this is nice to see as Netflix is accelerating subscriber additions, especially paid subscriber additions, considering they now have an ad tier business. We see net cash provided by operating activities that jumped year over year, as well as free cash flow. However, we'll get into that in just a moment. I do want to talk about their upcoming Q4 guide, as Netflix guided for roughly $8.7 billion in top line for this upcoming Q4. That would be good for roughly 10.7% growth on that top line. Estimates are closer to $8.77 billion, so roughly in line with estimates. And then for that bottom line, they're guiding EPS to come in at $2.15. That is just slightly lower, as Wall Street was looking at a guide for $2.20. Now, for the upcoming Q4, Netflix also did say they're expecting paid net additions to come in similar to Q3 2023, plus minus a few million. And so if in this most recent quarter, Netflix just added 8.76 million new paid subscribers, in Q4 you can expect roughly another 8 million net additions number, and so that will bring your global streaming paid memberships closer to 255 million memberships. Now, that is a big number and likely a reason for the big jump in the stock price. They also did expect operating margins now to come in at 20% for fiscal 23. That is the high end of their previous guide at close to 18 to 20%. So they're increasing their operating margin guide. They're also increasing their free cash flow guide for the full year to now come in at $6.5 billion. That is up from their previous forecast of close to $5 billion. They also repurchased close to 2.5 billion shares in this most recent quarter and increased their buyback authorization to close to $10 billion worth of stock buyback. Now, this is a company close to $160 billion in market cap. After the jump tomorrow, likely close to $180 billion in market cap. So 10 billion, certainly not minuscule, but it is not a large amount over at Netflix. Now, along with these guide increases, they did say adoption of their ads plan continues to grow, as ad plan memberships are up nearly 70% quarter over quarter, and 30% of new signups in their ad countries are to their ad plan. And so certainly they're doing a lot to scale up this business, and it's successful. Certainly $6.99 for an ad tier subscription to Netflix is not a bad deal, especially in countries where it's hard to squeeze more revenue out of users. And we can see just that happening. As you see in United States and Canada, they're roughly charging now $16.29 per membership, and that number is actually down year over year, as it was closer to $16.37. So they did add close to 1.75 million new paid additions. However, you see that revenue was roughly flat year over year, it grew 0%, just because they were not able to squeeze more revenue out of each membership. Now in Europe or EMA, they were still able to go up on price as well as gain new additions. As you see, they added close to 4 million net paid additions in Europe and Middle East. Now in Latin America, again, they were roughly marginally able to go up on their revenue per membership and add roughly 1.2 net paid additions, which led to roughly 3% growth on that year over year side. Now in Asia Pacific, surprisingly, they weren't able to go up on price. As you see, average revenue per membership went down substantially, down from $8.34 down to $7.62. So they were still able to add new users. However, in a market like Asia Pacific, they probably don't have the room to go up on price like they do in a Europe or a United States and Canada. And so you saw revenue growth in Asia Pacific down roughly 9% year over year and 6% for constant foreign exchange. And so what this shows me is certainly in a market like Asia Pacific, having the ad tier business, I think, will be wildly successful, as that's a region where you can't really go up on price. It's very competitive, as streaming services out there are very cheap. And so a ad tier business in those regions will certainly do very well. And then what that'll do in places like UCAN and Europe is more people will move from the ad tier business onto their higher, more expensive ad-free tier, which will drive up their average revenue per membership over time. And so it's kind of a win-win, I think, in my opinion, adding this ad tier business where they can kind of increase new paid users in Asia Pacific and then go up on average revenue per membership in places like United States and Europe. Moving on to the statement of income, we see $8.5 billion worth of revenue. Last quarter, we were sitting at roughly 8.2, and then a year ago, we were sitting at roughly $7.9 billion. You see, cost of revenues actually haven't moved all that much, up from $4.8 billion a year ago, now up just to $4.9 billion. Now, reason for this small increase in cost of revenues is likely due to the writers' strike and the actors' strike over at Hollywood. And so certainly they haven't been able to spend all that money on generating new content, as these writers and actors have been on strike. And so that's likely causing their cost of revenues to sort of stay muted while they see the benefits of revenues still increasing. You see marketing actually tick down quarter over quarter substantially, and also tick down year over year. So that's good to see, as Netflix really controlled costs on that marketing side. Technology and development also down on a year over year basis. And then you see general administrative up year over year substantially, I would say $100 million. And so while Netflix was able to control costs on marketing, technology, and development, and then their cost of revenues didn't really go up all that much, they did spend a whole lot more on G&A. And so their operating income did improve roughly $400 million from same time last year. Net income coming in at $1.7 billion. That is up nicely from same time last year, as it was closer to $1.4 billion. We see shares outstanding are also decreasing down to 441 million compared to 444 million same time last year. They did authorize that increased in share buyback of close to $10 billion. And so while Netflix shares are up substantially over the past 1 year, they still do think their shares are undervalued, and considering they're up nearly 12.5% on the shares that they had purchased. Moving on to the balance sheet over at Netflix, over the last 9 months, cash and cash equivalents are now up close to $7.4 billion. Netflix does have a large portion of their assets in these content assets, as that's sitting at roughly $32 billion. So a substantial amount of assets for Netflix in content. Total current assets coming in at 10.7, we'll call that $10.8 billion versus a total current liabilities of close to $8.3 billion. Now, Netflix does have roughly $400 million worth of short-term debt, and they do have a substantial amount of long-term debt and non-current content liabilities, as their long-term debt is close to 13.9 billion, and then non-current content liabilities at close to 2.7 billion. And so while Netflix does have a current ratio over 1, its balance sheet is not great, and so all this free cash flow and earnings that they'll be raking in over these next few quarters, they can improve their balance sheet with that cash flow. In my opinion, Netflix, I think, can use upcoming quarters of cash flow to reduce this long-term debt in order to reduce the interest expense they pay on it. And certainly, I'm sure they're paying a substantial amount of interest on $14 billion worth of long-term debt. Moving on to the statement of cash flows, we bring down that $1.67 billion net income number, get to subtract some content liabilities, add some content assets back on, and we get to a operating cash flow number of close to $2 billion. Last year, we were sitting at just $557 million, so nearly a 3x in Netflix's operating cash flows. Now, they did recognize roughly a $400 million gain from short-term investments. However, they did spend close to $2.5 million in financing activities, and all of that nearly being on the repurchase of common stock. As we know, Netflix bought back $2.5 billion worth of shares in this most recent quarter. For the last 9 months, Netflix has bought back roughly $3.5 billion worth of shares, and we know they do have roughly another $10 billion authorized to continue to do share buybacks. And so realistically, that should provide some level of support for Netflix shares in the event that they head lower. Now, speaking of heading lower, that is certainly what Netflix isn't doing, as it's seeing shares rocket nearly 12.5% in the after hours. I put up this green candle to kind of represent how far Netflix has moved up. If these gains do hold throughout the trade tomorrow, we'll see how that goes. However, I do see Netflix coming here, hitting its head near the uptrending trend line. This trend line goes all the way back to June of last year, and Netflix had sort of been locked in this uptrending pattern of making higher lows and higher highs, and then it finally broke through that range back in September. And since then, it had been heading lower. Now rebounding up to this range once again, I do think it'll come in here and maybe look to backtest this trend line and possibly head lower from there. Now, in my opinion, I would wait to see how Netflix trades out over these next few days, really. I wouldn't come in here and chase this stock if you missed this 12.5% move up. Certainly, it has the opportunity to get rejected and then head lower. I would really look to pick up shares of Netflix somewhere in this $320 range. This would act as a level of support, as it has acted as resistance a few times. Netflix also has this gigantic gap, which it has filled over the past few quarters. However, it could come back and backtest this $320 range, and certainly below that could get closer to $300 per share. And in my opinion, I think this range would certainly be a point where I would consider to pick up shares of Netflix, and then below 300 certainly is a possibility, although I think that point is fairly unlikely, as Netflix themselves will continue to do share buybacks if these shares head lower. Now, if Netflix does come in here and maybe put up a second green candle above this sort of lower end of this channel, well, I think at that point you could possibly come in here and maybe play it as a swing trade. As you can see, it has the room to head higher, probably not to the top end of this channel, as it's quite wide, all the way from $400 to $500, but I think certainly to the middle end of this channel, closer to perhaps $420. And so you certainly would have close to $20 in upside, and then if you put a tight stop loss at roughly $395 per share, you could probably have $5 or $10 in downside. And so certainly this could be a risk reward trade you could play, but for that I would wait for Netflix to put up yet another green candle, perhaps above this lower end of the channel. And so at that point, I would come in here and put a stop loss at the bottom end of the channel, and then maybe trade it up to close to $420 to $430 per share. In my opinion, I would wait to see how Netflix trades out. This has been sort of locked in this higher high, higher low pattern, and then recently broke out of it. I don't think it will right away come back and follow this uptrend and just resume. I believe Netflix can trade sideways until really the end of the year. So if it comes up here and heads lower, I would be excited to pick up shares of Netflix sub 320 and then closer to $300 per share. That was my take on Netflix. Congrats to any of you guys who have been holding shares of Netflix and will realize this 12.5% gain tomorrow, certainly give yourself a pat on the back. It has not been easy holding shares of Netflix, especially if you're doing it over a long period of time. Let me know what you think of Netflix in the comments below. Are you coming here and buying shares closer to 390, or are you looking to sell shares at this level? Let me know in the comment section below. As always, thanks so much for listening, and I'll see you guys in the next video.